Well, hello again, Solis Wealth family. Greg Solis here for our market update. First of all, again, quick family update. We're in the house, we're settling in. Punch list was about this big and now it's about this big. So we're getting through the punch list and starting to actually enjoy the place. And boy, what a blessing. It truly is a blessing to be there. So we're excited. Can't wait to have you over. Can't wait to have the client appreciation party there. So lots of excitement there. Kids are doing great. Monica's doing great. Miss Nicole like crazy. Can't wait till she comes home towards the end of November. And that'll be a great time with her. Market wise, it continues to be a crazy time. Last week was a little bit more challenging, gave a little bit back, but the markets are still hovering really close to their all-time high, roughly about 3% off their all-time high. Not too bad considering we're in the midst of a pandemic still. The numbers still look a little challenging with the COVID thing, but there's some good signs out there still. The GDP numbers look kind of good. I was looking at the leading economic indicators that kind of show the global growth of the GDPs and around the world, and frankly, not too bad. So there is some optimism as we come out of this pandemic, and even though some of the stimulus packages haven't passed, there's some economic growth that's out there, and that's helping to support these markets. Of course, if we do get a stimulus package, we should see a pretty good surge in the markets. So I think once we get past the election, the odds of a stimulus package at this point slim to none before the election. But if we do get one, or when we get one, perhaps after the election, we think that that's going to be a market mover. And so there's some optimism, especially on the shorter term, that potentially we might get a pretty strong market with the stimulus package getting passed. That may not happen until after the first of the year, however, so there might be a lot of swings and some volatility, but once that does pass, we think that there's some potential opportunity. What that does to the long-term fundamentals of our economy, well, that's something I think and think deeply about is how does this play out? What's the end game 5, 10, 15, 20 years from now with these trillions of dollars of debt that we have? I was reading here somewhere that it took us 200 and some odd years to get to $13 trillion in our national debt, and then we just got another $13 trillion of debt in the last 10 years. So amazing, over 230 some odd years to get the first 13 plus trillion dollar in national debt, and now we double that in 10 years. So that's problematic, and that's something that I think we're going to have to look at. But the interest rates are low, so the government is paying less on the national debt than they were 6 years ago because of the low interest rates. The 10-year Treasury is stubbornly low right now, staying below 1% since May. We haven't, actually since March, we haven't seen the 10-year Treasury above 1%. So it's hovering about that 0.7%. And that helps the payment that the government has to pay on the national debt. So it's kind of a strange time as far as those things are concerned. I'm getting a little bit technical here, but it's just a crazy time. But overall, everything looks pretty good as far as the GDP numbers and the markets and the growth of what's taken place. So there's some optimism that we get through these elections and maybe we'll move forward pretty good as the economy recovers quite a bit. So with that, my very best to you. Again, never hesitate to call if you need us. Looking forward to seeing you all in the office, hopefully really soon when we get through this pandemic. You take care for now. My best to you and your family. God bless.